Hello, welcome everyone to the webinar Fintech Trends and Opportunities and Challenges. First of all, I would like to introduce myself. Many of you know me as the co-founder and CEO of PipTrade, but I've been in the Fintech industry for maybe 7 years now, 8 years. I founded this company in 2014. I was also head of product management of a fintech company called Fidor. Fidor was the first digital bank in the world and the first banking as a service platform in the world. I worked for as a head of product management of Fidor Solutions, which is a company on Fidor that creates software as a service for banks so they can offer a digital banking proposition. So I kind of know a little bit about this topic, so let's get started. So when does fintech, the first time fintech name was used, it was in 1980s by Peter Knight in the Sunday Times. However, the term wasn't a common term until 2007 after the financial crash. Okay, so what is this fintech? Fintech is an abbreviation of financial technology only, but it has become more relevant in the late, in 2010s. Many companies have created these companies to disrupt previous concepts of how the financial system works. Okay, so let's take a look on what type of industries fintech covers. They cover lending, okay, in marketplaces, and also alternative underlying underwriting platforms, crypto and blockchain, RegTech, big topic now. Banks spend a lot of money on regulatory issues and regulatory processes. Personal finance as well, manage bills and credit and many different things that retail users, they cover retail users' needs. Payments and billings, insurance, capital markets. Capital markets is a big one as well. Wealth management. We have robo-advisories. Now we have in capital markets, we also have new disruptors like Robinhood in the US. And I'll give a few examples of them, okay? Money transfer and remittances. Now we have TransferWise, we have PayPal, we have all these tools that are disrupting the previous ideas. For instance, Western Union was one of the largest remittances and money transfers, and it's been disrupted heavily. Payments and billings, well, you can see Visa and MasterCard being disrupted as well. I'm gonna go with lending. We have these marketplaces like Lending Club which it's a crowdsourced platform. It's a marketplace that allows people to get access to credit in a cheaper way. And on the other side, to the investors, they provide a better interest rate than what is in the banks. Payments and billings, we have Alipay, we have WeChat, big disruption to Visa and MasterCard. As I said, capital markets, we have Robinhood disrupting traditional brokerage houses. Also, it changed the whole game in trading. Wealth management as well. We have the robo-advisors like Betterment, Wealthfront. They disrupted as well the wealth management industry by lowering the fees with these type of robo-advisory firms, using ETFs to provide a cheaper way of managing money. And now we also have the neobanks, which is sometimes a combination of several of these, and challenger banks as well. We've seen massive flows to these banks. And I'm gonna go a little bit deeper so you can have an idea on how fast this is growing, okay? I grabbed several charts from very different sources. So this is a fintech landscape, okay? We have banking and payments. There are 54 institutions that do that. Most of them are in Europe. Why in Europe? Regulation is more open to this type of platforms. But the wave is coming to Latin America, to the US, okay? There are now several banking and payments, digital banking and payments going into the US, okay? In Europe, the leaders can be Revolut, N26. Revolut is in the UK, N26 in Germany, and several others like Atom Bank, Monzo, and there's many digital banks that offer an awesome experience. You don't need to go to any branch. You sign up online, you do everything online. They have no branches at all, okay? In payments, we have 302. Of course, we know PayPal, we know Alipay, we know WePay. Well, that's in Asia, right? But there are many firms we know Stripe as well, huge. Venmo, huge in the US, that are disrupting the common way we used to make payments. We have in investments, we have, of course, Robinhood, as I said, Betterment on the wealth management side. We have Wealthfront. We have eToro in Europe as well, with social trading as well. We have financing, Lending Club, big player. And now we're looking at some trends as well. Okay, I'll talk of them later. In insurance also, every time, we're looking at more companies going into insurance, although it's still not as big, only 82 companies there. Direct lending, 84. Real estate is something that is it's also starting to pop up, only 15. But of course, there's more complexity on the real estate. There's lots of legal and the operation is a little bit more complex. Now we have crowdfunding as well. We already talked about lending law. Okay. Infrastructure, well, APIs connectivity, big topic in Europe because we have the open banking regulation here, which is a major change in the regulation. It is called PSD2. Okay, all banks in Europe need to open their APIs for third-party payment providers, and that was due on September of last year. Okay, so anyone that has a third-party payment provider, meaning I'm not a bank and I want to make payments on behalf of my client, I can open an app, okay? And I don't need to have a bank. I can do transfers on behalf of my client using my client's banking account, okay? Account aggregation as well. So I can have an app right now in Europe that it's not a bank, but consolidates all my accounts in an app from all my different banks in Europe. And in this app, they can make payments without having to access their banks. So if you see, the whole game is changing. There's no, right now, people are fighting to be the front end of the banks, okay? There are several platforms popping up in Europe that are getting very successful at it. Now banks are adopting this as well, okay? They are doing all different types of development to compete with these new companies, as new startups, and some of them they're doing well, some of them are not. But at the end, we can see a trend of every single bank going into this direction. Okay, like let's put it this way, and I'm going to emphasize a little bit on PSD2 because it's transforming the banking industry. Now, any bank in Europe can have information from another bank. Let's say I have an account with Santander, and I have an account with BBVA, and I have an account with Barclays, okay? I can open my Santander account in my app, and I can see my balances and my transactions of my BBVA account and my Barclays account. I can even start making payments from those other banks. So at the end, what we're dealing here is fighting to be the first bank, so that's the bank that allows me to access to all my different accounts, so I don't need to open, never again, let's say, BBVA or the other way around. If I have all my accounts in one app, then for me, there's no need to open anything else. Okay, so that's the disruption that this regulation is bringing to the table. It was huge. It was a huge effort on all banks. And of course, they're getting access to smaller players to do payments on behalf of their clients. If I have a better user experience, I'll probably be having the information of, and I would be the front end of these banks, okay? And cryptocurrencies as well. We've seen and we reviewed this topic here where the transaction, the problem with this is it's, first of all, regulation, and second, it's not very scalable. I don't know, Bitcoin processes a lot less transactions per minute than Visa or MasterCard can do. Okay, we have compliance and scoring. We have business tools as well. You know, billing. I can now do billing, and I can charge my clients with an app. Okay, it's transforming how we do accounting as well. I can do my accounting with an app. I can do my taxes with an app. So it's making life easier for customers. We have blockchain, we have data and analytics. Huge topic here, data and analytics. It is, you've seen how Toggle is one of them. You know, they're using data and analytics to do better research. We can use data and analytics to offer different products to our customers to see how they're behaving in our application. We can do so many things with data right now. Now, you know, customer service. What's happening in customer service? Most of the large banks, they have a chatbot. So the reduction of the number of customer services agents is reducing a lot at this type of companies. So you can see there's huge amount of players, and there's many different industries, and all these industries are being disrupted in some way. You know, banking, financial institutions, brokerages, you name it, it's being disrupted, and very, very customer-centric, all these companies. But that's I'm just telling the nice and cool side about fintechs, but we will talk about a little bit more. The amount of fintechs in the world, okay, it doubled from almost doubled from 2018 to 2020. I don't want to even think about 2015 when we launched PipTrade. It was originally a social trading platform. We transformed into education, but back then there were no more than 1,000. Okay, so in 5 years we can see that the growth. And look at, it's very important to see it here, how the proportion of number of companies in the US compared to the number of companies in Europe and in Asia. If you see here, the number of companies from 2019 to 2020, just in Europe, doubled. Okay, it grew by 100%. In comparison with the US, you can see that it was flat to 2018, 2019. It had a little spike on 2020, but it was probably 40%, something like that. So in Europe and in Asia Pacific, it's growing by 100% per year, the number of companies. Why is this happening? First of all, in Europe, it's clear PSD2 was a major game changer. And in Asia Pacific, the way people are paying right now, it's completely different. I'll show you a little bit in some other slides. But now, what's going on with the macroeconomic thing? Okay, we need to be realistic here. Okay. Most of these fintech companies are only focusing on growth. Okay. They're giving most of their services for free. Robinhood was a pioneer in this. They said, we don't need to charge for trading fees. Okay. Now we have the digital bank saying, we don't charge you for having an account. We don't charge you for having a card. We don't charge you for many different things, okay? So their focus is very, very growth oriented and not revenue oriented, sorry, okay? It is a good strategy for some of them, but not for all of them, okay? If you are one of these companies like N26 with massive growth, you have chances of succeed. But with the current economic crisis, the number of fintech funding has dropped to 6.1 billion. That is in similar, in same quarters. In 2016, it is the worst since 2016, okay? We go back a page, okay? How many fintechs were in 2016? You can see, you can look for the data, but there were a lot fewer companies. Okay, so what does this mean for new fintechs? They're struggling. Some of these fintechs are called what I call VC subsidized, which is they're not making any money. As soon as the VC venture capital money pulls out, most of these companies can go to bankrupt, and that's a fact. You know, if you're focusing on grow only, and then you don't have money to grow, well, you can expect what can happen. If you're not making money, then the consequences can be huge for these companies. Everyone wants to grow and be the next Facebook, but not all of them can accomplish that. Especially if we're talking about how many companies we have here. We have around 20,000 that all of them want to become the next Facebook. There's no space for, there's no time for having that many Facebooks, that many Instagrams, like that many. I'm comparing it with Facebooks and Instagram. Why? Because that's what seems to be the business model. I'll show it up in another slide. Okay. So massive drop on funding for these companies. The winners, it's a winner takes all, as we call it. If you're N26, if you're Revolut, if you're Robinhood, you'll be safe. Like that's my takeaway from here. If you're starting a company and you're not getting huge growth or you're not getting revenue, you'll probably be struggling to raise money. Therefore, you'll probably be having problems in the very near future. I'm gonna give you some examples on how Fintech is changing the world and how fast these companies are growing. Okay. Nubank, it's a Brazilian bank founded in 2013. Today has 20 million customers. It's the largest digital bank in the world, and it's only operating in Brazil for now. Itaú, okay, has 27 million customers. At the speed that Nubank is growing, I don't think it will take a year. I think it will take less than a year to overpass Itaú. If you see the assets that Itaú puts on the market, it's not comparable. Nubank is an app. Of course, it has a lot of technology, but Itaú was founded in 1945. It has 5,000 branches. It operates in 21 countries. The speed that Nubank is growing is very, very surprising. So if you can compare, something that was founded in 2013 with not even comparable assets to what Itaú has, you can see where this is going. Okay, it's going fast, and it's taking a major stake of the market. I'm gonna put another example. Visa and MasterCard, they handle 2,000 transactions per second. Alibaba in China, part of Jack Ma, handles 250,000 transactions per second. This is new. Visa and MasterCard they have a lot of history. Okay, Alipay doesn't have more than 10 years in the market, and it's already more than 100 times in terms of transactions. Okay, everyone in China, most of the people in China, they now pay via Alipay or WeChat. If you don't know WeChat, it's like WhatsApp in China. It's a WhatsApp of China. People pay with that. There are now many places where they don't allow cards. They only allow Alipay or they only allow WeChat. The transformation is getting faster and faster. Okay. Why? Because these companies are more customer centric. They are where the clients are. They meet their clients wherever they are. Okay. Now, another example, Robinhood, 10 million customers, founded in 2013. Almost reached the size of Charles Schwab, which has 11.3 million customers. This company was founded in 1971. You can see the speed, right? Of course, in terms of profitability, complete different stories. In terms of the services, probably in this case, complete different story. Robinhood has had some issues in the past on trading. They have some issues on volume that they couldn't handle some of the volume of these previous, let's call it correction or crash, however you want to call it. And of course, their reputation has been a little bit impacted. Okay, so we can see that the speed of these companies it's massive growth. Okay, not very revenue oriented, but I'll show you later where this is going. Okay. Now, let's look at the numbers of revenue of challenger banks or neobanks in comparison with incumbent banks. Incumbent banks are banks that are traditional, like, I don't know, Santander, Chase, BBVA, Citigroup, okay? They have direct revenues of around, this is unit economics, this is per customer, okay? Direct revenues of, let's say, 140, okay? direct costs, okay, of around probably the same. So the direct profit, it's a little bit lower, let's say $40, okay? And the cross-selling contribution of that is over, let's say $60, okay? So in total, these companies, this is an analysis of Oliver Wyman, part of it's a consultancy firm that focuses a lot on fintech. Got the name. It is well, it's irrelevant, but they're a part of a larger consultancy. Okay, so they make around $70 per year. Okay, that's an incumbent bank. Now let's look at these challenger banks. The direct revenues are $40 per customers, and direct costs are also around that as well. Okay. Cross-selling is around $30. So the fully loaded profit is around $30. But here's a catch, okay? The problem with this is that the cross-selling contribution, okay, with these challenger banks is mostly advertising. So they're advertising something else, or let's put it in another way. And I've been working in this sector for, I know most of the players, and I know what's going on. So most of the challenger banks want to become a marketplace, want to become they want to get revenues from referrals. They want to take revenues from affiliate marketing, okay? So the business of banking right now on challenger banks with respect with incumbent banks, it's a complete different business model. The business model of challenger banks, it's more related to something like more like Facebook, you know, like Meta or Google or Amazon, or you know, no, not Amazon, Google, Facebook. They are making money on referral and affiliate rather than making money from their own clients. Okay, so there's a problem here if you don't have volume enough. Okay, I cannot sell advertising, cannot sell lots of things if I don't have the volume. Okay, so that's something that is, the business model is completely different. Everyone in the banking side, they're asking for account aggregation, they're asking to know the patterns of their customers so they can have offers to their clients according to their needs. So they want to learn a little bit more about you and how you spend your money. For instance, if I know that you just spent money on a car, or this is just an example. I know you're paying a car, okay? I know that I can offer you an insurance for your car. And if I know how much you're paying for your insurance, I can even tell you that you're paying a little bit too much on your insurance for your car, and I can offer you that product, okay? If I'm paying utilities, I can tell you if you're overpaying or not. And if you're overpaying, I can offer you something better from the marketplace, you know, from other people. So if you know how your clients are spending their money, you have a chance to offer them better and more suitable products. This is where I see the industry going. That doesn't mean that I have the complete truth, but I've been seeing, I would say, probably 100 or over 100 cases, okay, of challenger banks and neobanks and these fintechs, and doing research on them. And this is where it seems to be going. Understanding your patterns, your behaviors, and knowing when I can offer you and how I can offer it to you. So this is a different model. Okay. Of course, if you need to do something on real estate, you probably won't go to N26. You won't go to Revolut. You need to have an account with these incumbent banks. Yet still, okay. So these challenger banks are becoming secondary banks, not primary banks. Everybody has a primary bank in Europe and in the US with an incumbent bank. And they use the challenger banks to do payments and to do some other things. But when it's a loan, when it's advisory, when they go to the incumbent banks. And the secondary banks are playing a big role here. I was going to tell you, there's some research firms. In this case, it is, I forgot the name of the research firm, but they state that 80% of incumbent banks will go out of business by 2020. Sorry, by 2030, okay? In 10 years. 80% of the banks as we know them, they might not be there anymore. That's a huge thing, you know, and you can see it. You know, everyone is tapping into having a digital proposition because the challenger banks are coming very, very strong. I'm not saying that there's no need for having an incumbent bank, you know, but it's a mixture of the incumbent bank and a challenger bank. A very good example is what ING is doing. ING is one of the banks that is doing the best on having these both experiences, the digital and the incumbent. They have a great app, and people seem to accept it, that these guys are doing a good job on that. So that's pretty much it, and I would like to take any questions you may have. If there are any questions. No questions at all? Okay. Was this useful? I have here somebody, Adriana Rivera. I have a cousin called Adriana Rivera. I don't know if it's her or not. How do you see the future of fintech in Mexican industry? Well, it's coming. You know, every day we hear more the open banking. Okay, every day we see this. Don't be surprised if Nubank opens a branch. You know, they open their business in Mexico very soon. Okay. Don't be surprised that there will be more brokerage coming there. Well, brokerages, not so many, but it's coming, and it will make a huge difference because financial inclusion in Mexico, it's a big, big deal. Not many people have access to banks. That is why we can see most of the profit from Oxxos comes from financial transactions now. Now, everyone has a phone. If you have a phone, you can have a bank now. So I wouldn't be surprised if in the next couple of years we see some of these banks taking large part of the market share. It'll be something really good to see that. Let me see. There's another question here. Manuel will support them. That some fintechs related to banks necessary needs. Yes, we need. It's not one or the other. It's an ecosystem. They say the difference between these two is no, that's a private company, Cesar, Nubank. It's not public yet. It's collaboration between banks and fintechs. That's what's happening, right? The disruption, the new technology generally is coming from the fintechs, but incumbent banks are acquiring or making partnerships with these startups. So it's collaboration, the name of the game here. And we will be seeing a lot of consolidation. That's my forecast. A lot of consolidation in this industry in the next years, months. I can tell you a few examples. Many of these companies are worth billions of dollars, okay? Without revenues or very, very small amount of revenues. They're called unicorns, you know, over $1 billion. But that is not, for me, I can see that's not sustainable. And at the moment when people will back up, VCs will back, you know, pull out, they'll be struggling, okay? So let me put you an example of Betterment, okay? These guys have a robo-advisor, which I think it's really good, okay? So they have the technology, and now you, let's say an algorithm can manage your assets, your investments. You don't need to go and open an account with your bank, and they manage your investments according to your age, profile, etc. Okay? Whenever they launched that, then the banks came and said, well, I can do that as well. And they created their own robo-advisor. Okay, so now the banks, these wealth managers, they don't only have robo-advisor, they have wealth management personalized, with a traditional one. They have a brokerage. They can provide you loans. They can provide you a lot more things. So at the end, what the market is doing is traditional firms are acquiring or collaborating with these fintechs. And if they don't want to collaborate with the fintechs or the startups, they don't want to collaborate, well, they better be huge, because otherwise traditional companies can create that same technology. It's all about technology, right? So what I was going to say is Oliver Wyman is part of Marsh and McLennan, Mercer as well. Any other questions that you'd like me to address? Was it clear? Was it helpful? Did you learn something? I'd like to hear a little bit about it. Anyway, I'm going to stop the recording now. And I'd like to thank everyone for joining this webinar. Will be posted and will be shared in all our media. Okay, thank you very much for listening. Gracias a todos por participar. Sé que la mayoría son mexicanos, pero este era un webinar en inglés que nos estaban pidiendo. Espero que les haya gustado. ¿Les gustó? ¿Aprendieron algo? ¿No aprendieron nada? Sí, sí les gustó. Bastante. Qué bueno. Lo puedo hacer en español, tal vez. Ok. Está bien que practiquemos en inglés. Gracias, Alfredo. De los retos, sí.